Alright, ladies and gentlemen, we're back, and in today's video, we're going to be discussing the trade review. Two trades this week, and we're also going to discuss soybeans too, because this was kind of an interesting chart. So we'll discuss that one after this pair, because really this is the only pair we're going to be talking about. There's two setups, so let's talk about this. There was also a quick poll that I made on Twitter. I'm going to talk about the poll I made, talking about how many trades you should make in a week, and then maybe two questions that were brought up that I thought I'd just kind of ramble on about. All right, we'll talk about that at the end. Okay, so thanks so much for joining. Make sure you guys hit that like button if you guys really want. All right, cheers. All right, so first things first. Let's just show you where I actually two positions, like two opportunities. This was the first one. Aussie Yen, yeah, this was the first one, rally-based drop supply zone. And then the second one was today, Friday. Friday was a very active day. So those are the two levels we're going to be talking about. So let's first talk about this one over here. All right. So why would I want to be interested in shorting, selling, right? The Australian's been on an absolute tear over the last week, so why would you want to be selling? Well, because I understand where prices are in the big picture. This goes back to my multiple time frame analysis video on understanding the higher time frame. So prices were coming up into a daily supply zone. That told me, hey, this is a quality zone, demand zones, and we kind of broke upward momentum. So that was telling me, hey, there is a significant amount of sellers in this area. So that, I wanted to go short bias up in this area. So when prices came up here, that told me, hey, I want to be a seller. So what did I do? I went down to my 30-minute time frame, my entry time frame, smaller time frame. And I saw this demand zone. I wanted to see this demand zone getting removed. Why, might you say? Well, because it's clearly been respected once, twice, three, four, five, six, seven, eight. It's like this line in the sand where each time it's came back to it, it's respected. So if I wanted to sell this thing, I at least wanted to kind of see that this demand zone was removed. So we actually got it by seeing this break right here, and we continued to actually make lower lows and lower highs. Now we continue to go lower and lower. So I wanted to catch the origin of this move. So we talked about that. So that was the level. Your first target obviously would have been before this rally-based rally demand zone. It offered you a quick, at least 2-to-1, right? Depending on where you put your stop loss, if you put it maybe there, or you went more conservative, you went up there, you were at least getting 1.5, probably 2-to-1 with that target. And then second position, if you did manage to hold it, you probably would have gotten stopped out at break even. So that was one opportunity, just understanding where prices were in the higher time frame. We saw that evidence coming in, selling. There was some people that I know that took this short. I was taking that. That was totally doable, 100% legit. A bit more aggressive than my entry or the opportunity that we just talked about. So prices came into that one, obviously kind of removed demand, kind of broke upward momentum. It was the more aggressive setup. Remember, aggressive doesn't mean bad, it just simply means more aggressive. Okay. Next level, let's talk about today's opportunity, because this was a trade that I was in, but I kind of got screwed out of. So let's talk about it. Obviously, same thing. We're inside that higher time frame daily supply zone. Do I need to keep going on about why I'm looking to sell using the supply and demand methodology? I understand where prices are in the big picture. All right. So let's go down to the 1 hour. So this is what I saw. I kind of saw upward momentum lines being broken. I saw demand zones being removed. So I was like, hell yeah, I want to be looking for selling opportunities. And so that was the selling opportunity that I took the short in. So that's what I took. I took the short pullback. I kind of got screwed out of this. I would like to say, yeah, I caught this whole move 3-to-1, 4-to-1. And my second target was actually right before this drop-based rally demand zone down here. But it didn't happen. So let's talk about it. Let's go down into the 30-minute so you can see what happened. Let's go 15. So this was more of an aggressive setup. It was kind of took out this demand down here. It was on my entry time frame. It was going back up deeper into that daily supply. So I kind of managed this one pretty aggressively. I got my first target out at 1-to-1 down here. And then I moved my stops to break even, which was obviously right here. It was somewhere right in there. I moved it to break even, and I got stopped out by this pullback right up here. I was probably the sucker that ended up technically buying, because I got out of my position back out here because of the spread. So if we actually dive down into the 5-minute, we'll kind of see it more. I went to bed. As soon as I moved my things to break even, I was laying in bed and I was like, shit, like I don't know if that was smart, but I was like, screw it. We'll leave it on anyways. I probably should have placed my stop loss above that structure, that 5-minute rally base drop. That's probably the smart idea, but nonetheless, I moved it to break even and prices still managed to never actually go back and touch it. But I got stopped out because of the spread, and now I use an ECN broker. And for this one, Aussie Yen, the spread usually ranges between 0.3 and like I'd say 1 maximum. Sure enough, I probably just got like completely screwed. I got stopped out by the pips, by the spread. So I was probably the last one to get out before this drop happened. I found that out after I woke up, and prices after I got out at break even, prices completely just shattered and went all the way down. So I wish I kind of captured that whole move. I kind of gave the whole top-down analysis in the Discord group that I'm in, or with the Moneyball trading group. We talked about it in questions for Austin, income, watch list, setups. Where's this? Trade reviews. Here was the Aussie Yen trade review. So we were talking about that, and then I made the daily recording for them too as well. So let's go back and talk about soybeans now. So that was that. Let's try to keep this under 10 minutes. Soybeans. This is a trader I know. He sent me a message saying, hey, I'm shorting soybeans. And I was like, yeah, let me have a look. I completely agree. I actually still have this on my uh, chart, so this is kind of good. This is the daily time frame. He was shorting it for higher time frame trading. I saw this channel, up, down, up, down, up, down, right? So I kind of drew this channel across, the upward channel and then the downward channel to create it. So every time we came down here, we've bounced up, and every time we came up here, we kind of bounced down. This is where sellers were, up in these areas. So I was like, damn, yeah, I would like to be a seller too. We're coming up high. We're at an area where sellers are exceeding buyers. I saw the upward momentum line being broken. I'm not sure if you can really see that. It's that red line right here, not the Bollinger Bands. I kind of just threw these Bollinger Bands on for fun for the day, just to try them out. So we'll leave them on. So it broke that upward momentum. It's that red line, and that's like the first indication that price is starting to turn. If you go back in my tips videos, you understand how prices turn from inside out. So this was the first indication that prices were starting to turn, and this was your sell signal. And actually, we removed some demand right here. So this was the first pullback that you could have took right here, and that's where he actually got short. And I don't even think he trades supply and demand. I think he trades, I don't even know what he trades. He just told me he's shorting soybeans. I completely agreed. I messaged him. I said, yeah, I agree. I sent him this picture. He said, thanks for the picture and the analysis. This was the demand zone that was holding prices. This is why you see this gray box, because prices came down, touched it once, rallied up, came down, touched it again, and then rallied up. So I kind of just left this on here as in this is the most recent demand zone that's holding price. So now that it's obviously broken, it's working out pretty well for him, right? I'm not sure where his targets are, but that would be using the supply and demand with kind of other strategies out there. Because I know there was one person messaged me asking me about, and maybe you're listening to this, supply and demand. He's going through a fund right now, and he's trying to get funded, and he's going through his test right now, and he needs to get 15% in a month in order to qualify for the next round or to qualify for something. I'm not too sure, but he was messaging me saying, hey, he's looking to combine this strategy, and this strategy, and now he's trying to add supply and demand to his methodology. He needs to make 15% a month. He's trying to get 2-to-1 risk rewards in every trade, and that's great. I think 2-to-1 risk reward is awesome. I think possibly combining strategies is great. You guys off, hear me talk about I use supply and demand, but that doesn't mean that, like we just talked about here, you can't use the channels, right? Obviously you can. Doesn't mean you can't use them if you're using only supply and demand, but you can use them as confluence. So I kind of use the supply and demand as the main methodology, as in I will only sell in supply and I will only buy in demand. But that doesn't mean I can't put on other indicators or chart patterns or stuff like that to add confluence or add confirmation or evidence to why I'm buying or selling, right? But to me, the way that he was wording it, he was kind of shooting. It was his second time around going through the program. He was just kind of gunning for it. He was trying to combine. He was asking me for tips like, how do I do this? How do I do that? And my response to that is always just focus on yourself. I wouldn't worry about adding all these other strategies, especially when you haven't already been trading them. I think what he's doing is kind of searching for that holy grail, trying to combine to create the best strategy. And at first that sounds awesome. I think we all get sucked into it, but I think eventually you just have to narrow it down and just focus on what you're trying to accomplish, your strategy, your methodology. It doesn't even have to be your methodology, right? It's just your trading plan that you trade. There's no methodology that hasn't been undiscovered. That's definitely true, right? It's not like everybody knows what Bollinger Bands are or trend lines or support and resistance, head and shoulders. It's not like you're the inventor of it and then you have the rights to it. It's completely bullshit. So if you can add these as extra confluence, extra evidence to your trading, sure, but make sure it's in your trading plan and you already are trading with it. Don't start trying to pull these other things and try to create the ultimate one, trying to grab these 2-to-1s every time, trying to make 15% a month every month, because that's tough to do depending on your risk management. But if you're risking 1% and you're getting 15% return in a month, that's extremely good. That's pretty tough to do with only 1% risk. You bump it up to 2.5, 5% risk. That's doable. 5% risk. It's actually pretty easy to get 15% return, but it's also pretty easy to lose it all or to take a heavy drawdown. So that's all I wanted to go into that. There was also, part of that question too was like how many trades I need to take. And this is when I actually asked this poll yesterday is um, how many trades do you make in a week? Have a great weekend. Cheers. So we got 50 votes basically. 75%, 71% actually said 1 to 7 trades a week. So I actually thought it would be the reverse. I thought more people would say, I think it's more for day traders and scalpers that they have more than 7 trades a week, but there is no need to trade more than like 1 to 5, 1 to 7 trades a week, in my opinion. This is obviously just my opinion based on what I trade. But if you're scalping, maybe doing penny stocks, I don't know, whatever the hell you're doing. But if your strategy is like a 90% win rate, but you're only capturing like 0.5% return and you're risking like 1% each trade, okay, but you're holding a 90% win rate. That's definitely great. That's awesome. But so you're obviously going to take more trades in a week, but it's not necessary to actually take more than 7 because if you really think about it, if we can all agree, say 20%, 20% in the trading industry a year is extremely good. If you can make 5% in a month, that's extremely good. To make 5% in a month risking 1%, you don't need to be taking 50 trades or 100 trades a month. All you really need is like those 2 to 3 good trades a week, and they add up to being 12, 15 trades in a month. And if you're taking all good trades, well, you should be able to accomplish that 5% a month. And obviously, if you're compounding that 5% over month 6, month 7, month 8, and so on, it starts adding up, right? And that's how you get those 60%, 80%, 100% returns in that year. If you're going to try turning that $1,000 account into 100,000, it's definitely doable. You hear about the stories all the time, but you really don't hear about you hear about the success stories, but you don't really ever hear about the blow ups, right? Because there's a lot more blow ups than those people actually doing that than turning their 1,000 into like 100,000. Just my 2 cents. I thought this was actually going to be completely reversed, but That's true. You don't need all these trades. Stop comparing yourself to all these traders, because you start scrolling in Instagram, everybody's scrolling and saying, everybody goes like this. What do? They go, they go like this. Oh shit. I just used the wrong one. Oh no, I did use the right one. They'll go like this. They'll be like, good. And they'll post that. And they'll be like, look at this winner. And to the eye, to the untrained eye, it looks really good. You're like, oh shit, 5 to 1, that's the target. That's great and all, but that doesn't really happen all the time. And like when you only see posts about winners, it can fuck you up mentally. So that's why I always tell you guys, stop using Twitter, stop using Instagram, stop using whatever, stop using Instagram, just or fake YouTube. I mean, stop using all those and just focus on yourself. Even if that means not listening to my videos. If you come back in 3 years from now and message me like, "Hey, bro, that was the sickest tip you gave me," dude, that's awesome. That's what I'm trying to do for you guys. But if you're just like saying selling courses or selling signals, this is what people want to see. They want to see these 20 to 1, 8 to 1s, 100% winners. That's just what people want to see. And I think that's what some people, based on their morals, they'll post only the winners and they will never show their losers, or they'll show their losers once in a blue moon, saying, I show my losers too, something like that. I don't know. But you guys know the gist of it. I kind of just gave you the spiel. Focus on yourself. Stop fucking comparing yourself to all these other idiots. And hey, call me an idiot too if you really want. Stop comparing yourself. Doesn't really matter to me. And I think that's it. You know what, to be honest, I don't think there was another question. So that's it for the rest of the video. Hey, but if you guys are interested in actually learning how we use the supply and demand methodology and how you can increase your trading and hopefully get successful in 2020, I strongly recommend you join the Moneyball trading group. Discord group's doing really well. I think everybody did extremely well on Friday. There's a lot of trade setups. We are patient all week waiting for these setups. It paid off. Everybody's doing really well. So basically in the group, we kind of do our daily recap meeting every day, where I produce a video talking about trade setups, explaining top-down analysis. They kind of like that repetition about how I talk about it, and so it increases their education. They understand what I'm talking about more. They hear it every day. They go back and watch the courses every day. We have the Wednesday trade review meeting where we ask Q&A. The Sunday weekly prep meeting that goes on for like an hour and a half, talk about the week ahead, talking about setups, things to look out for, and we talk all the day. I'm always in the group chat. If they want to come in the voice chat, message me. They know I'm always here to help. So if you're interested in learning more about it, I'm going to leave the links down below to moneyballtrading.com, or if you have any questions about it, let me know. I'm going to be changing up some stuff over the next month, so I really think this is the best time to get in. It's a little hint for you guys. So I'm going to keep you guys updated with that over the next week and talk to you guys soon. Enjoy the weekend. Cheers, guys. Bye bye.